When should you use a limited company? Well, there are many questions and many more answers in this video, so go check it out. And Fayez has asked a question as well, both connected, which is when should you use a limited company? And it's a great question. It's a question we get every week, if I'm totally honest, but it's one that we'll answer every week. Limited companies, why do people use it?
Because there is a perception sometimes that it is going to be more tax efficient than buying in your personal name. And sometimes it's because of non-tax reasons, for example, the risk mitigation and planning reason that I mentioned previously. So there are lots of reasons, but I'd say it jumps into those two buckets typically when clients come and talk to me about it.
Could I make a request? Could you now take off the hat?
Why?
Because when people watch this in March, enough said.
He's such a bar humbug.
I know.
No,
you have to. But we're not going to have a spat of marketing. Okay, I'm the marketing director. Come on, play the game.
5 more minutes.
5 more minutes. Right, I'm just going to sit here.
Sorry, team.
This is uncomfortable. Awkward.
So, Lewis, what's Lewis got to have to say?
Lewis,
hello,
when
Lewis.
should you use limited company? It's the same question. What's the disadvantages, though, of using a limited company? We're talking about tax advantages of using a company because it's 19% corporation tax versus 45% income tax in your personal name. You have got to always extract money out of the company. So there's one particular client that we can't talk about. But there's no point using a limited company if you need all the money for lifestyle purposes. So if you kind of think, well, I actually want to live a lot, not live a little, but live a lot, and you want all the money, then actually using a limited company can make you pay more tax. Let's not forget that income tax on dividends goes up next tax year by 1.25%. So if you're at 7.5%, it's going to be 8.75%. I'm now going to throw myself off. 32.5%. Is that right? 32.5 goes up to 33.75. Is that right?
Yeah.
Is that right? So, and then you've got corporation tax on that as well. So you could be in a position where you're paying 55% tax, depending on your income corporation tax as well, how much you earn. So you might be better off just keeping the properties in your own name or any business activities. And that's something that we will be visiting quite often throughout this year.
I think one of the other issues, I'm going to take my hat off now because we've had 5 whole extra minutes.
Yeah.
Anything to annoy poor Mr. Mishevich. I think the other reason that it can be a disadvantage is that sometimes it can feel like a sledgehammer cracking a nut. What do I mean by that? For some of our clients and individuals, they are just starting out. They're not making substantial amounts of money as yet. They may never want to make substantial amounts of money. They may just want it to tick over. And they perceive that obviously a tax rate of currently 19% corporation tax is perhaps better than where they are now, which might be at the 40 or 45%. And I understand that. But you need to look at the real numbers behind the scenes, because running a limited company, even if it makes no money a year, is going to cost you, I would say, somewhere between £2,500 and £5,000 a year before you even start to see anything happening. And that's because you've got to add up your bookkeeping software, perhaps bookkeeping services, accountancy fees, tax advisory fees, filing fees when it comes to things like confirmation statements and all manner of other key points you need to be aware of. So if it's not saving you at least the same amount of money as it's costing you in a tax bill, why do it? Why get yourself involved in that kind of activity? And when you add on top of that the fact that, for example, mortgage rates in a company are currently more expensive than mortgage rates in your personal name, you really do need to look at the absolute values and numbers, not just at the tax rates, in my opinion.
Yeah. And I think that's a lot to be said about in terms of you've got the extra administration, dealing with accountants, dealing with Companies House, HMRC twice over.
More deadlines.
It's not just about tax and money, but it's also about administration and hassle with that as well. So it can be quite painful to use a limited company. You've got to be very careful.
In some circumstances, and we did this as a bit of a quiz a few years ago as a team, we worked out how many deadlines there could be if you're running particular kinds of payroll and VAT. And it added up to something like 57 deadlines a year to do with a limited company and particular filing deadlines of particular forms. So it can become quite an onerous administrative burden.